In today's market, is it the best time to buy a home? Is the rate ever going to drop? Is it ever going to go down? We had the housing boom, then the housing crash.
Yeah.
Hi, I'm Paul Nicholas. Today I had David, our loan officer with Hozoro Mortgage, talk about the different type of products we have and that are available for you. I hope you will stay and join us and listen to David as he tries to prepare you for the pathway to home ownership. Why don't we start with, what do you actually do with Hozoro loans?
Well, I'm a licensed mortgage broker, right? So I originate home loans for folks looking to buy, refinance, or take that first step towards investment properties.
Awesome. My question that I have for you is, a lot of clients, their first question is usually is, can I afford a home in today's market?
Yes. What we would normally want to do is sit with that individual and go through their specifics, what they earn, what they owe, what their credit looks like, and then we'll paint a picture based off of their individual, what they can afford, and then it's just a matter of pairing them up against what market they're looking for.
In today's market, is it the best time to buy a home?
It's always a good time to buy.
Awesome.
Most folks don't realize that by being a renter, they're actually giving the opportunity of creating wealth to someone else. When you actually buy, you're actually taking advantage of that opportunity yourself.
So the client would have more financial freedom and stability by purchasing a home.
They're just creating more of an asset for themselves.
Awesome. Okay, so how much of a down payment does a client need?
Different programs have different needs, right? There are minimum down payment programs as little as 3%, some as little as 3.5%, others as little as 5%. So depending on the program, you can buy with as little as 3.5%.
So you're saying that there's different programs, different products.
Yes.
Let's talk about that a little bit. What is a FHA?
FHA is a first-time home buyer program. It's expanded guidelines, very similar to the conventional products out there. They will be a little more relaxed, so less down payment required. Credit doesn't have to be as amazing, and products typically tend to be fixed, like mortgage insurance. Those products are not as credit sensitive.
Awesome. Now, I hear that there's a product called conventional. What does that mean?
Think of conventional lending as money that banks make available to people, right? Okay. They're typically going to be backed by Fannie Mae and Freddie Mac, so we'll use those guidelines to originate the financing.
Got it. What is the minimum FICO score to be eligible to qualify for a home?
So generally speaking, the guidelines require a 620 FICO score, but each scenario is different. I've seen people qualify with as little as a 500 FICO score.
Okay. Tell me a little bit about that. I know earlier a fiance couple that you met and you were trying to finance them. One had better credit, the other one didn't.
Yes.
How did you manage to finance that?
So that scenario is still ongoing. What we're doing is the customer came to us with the goal of buying a property. So it was a buyer and a fiance. The scenario was that the buyer doesn't have as great credit. So as an experienced loan officer, we wouldn't just accept the application and force them through the system. What we're trying to do is maximize the opportunity for them to buy, because there's certain loan products that are better tailored to the better qualified, higher FICO score fiance. Just as an example, potentially they could save hundreds of dollars in monthly payment if we could make it so that just she was the one qualifying on the loan, even though they're both going to be on title.
So what's the difference? What is a non-QM? What is that?
Non-QM products are what we call non-qualified mortgage products. A general scenario where you're going to buy a property and you're going to live in that home is called qualified mortgage, QM. A non-QM product is typically investor-based products. They're going to be for rentals. They're going to be for products that don't necessarily go into all of the specifics of you being able to qualify for a payment. Okay. They rely on other factors.
Is the rate ever going to drop? Is it ever going to go down? We had the housing boom, right? Then the housing crash.
Yes.
Now, from my understanding, the rates have gone up. How does a person, middle income family, afford a house?
So if you study mortgage rates over the last 20, 30, 50 years, you'll realize that rates are actually fairly stable even where they are right now. When the market crashed in 2009, they were artificially depressed, right, down to 2%, 3% on a 30-year fix. Those were artificial forces that were depressing the market rates so that the economy could continue to function.
Because in the early
80s,
2000s and even the late 90s,
Right.
rates were at 8.6,
6, 7,
and 7.
right.
Before pandemic, because of the housing crash, the rates were at 2.75, 3.75.
Wasn't
It was-
uncommon.
Yeah. In today's market, it has just
They're
jumped
starting to
and-
normalize, believe
exactly.
it or not.
So what do you tell your customers, in terms of rate going down? Is it ever going to go down? How do you actually compress that to make them want to buy?
It's hard to have someone really grasp where the market is today without them studying where the market has been, right?
Yeah.
And exactly what you're saying is what we saw when the market crashed. I don't know if we're ever going to see that again. I think that what we're seeing is a normalized, stabilized market now. Rates are likely to continue to fluctuate where they are at, but do I foresee them ever going down to 2% or 2.5% or 3%? I sincerely doubt it.
So you're saying it's better to buy now than versus waiting
So,
as a renter?
So that's a decision that has to be tailored to the individual. I believe that as a renter, you are missing an opportunity by not buying a property. When you are a renter, you are actually making a payment for somebody else. When you are an owner, you're paying down your own mortgage, and if you notice what has happened over the last 5 or 10 or 15 years in this market, the market continues to appreciate. And so you miss out on appreciation. So you're missing out on wealth building. You're missing out on creating that asset for yourself. You're missing off on your tax write-offs. So if you have the opportunity to write off your mortgage interest, you're missing out on that. You're giving that to someone else. You're missing out on the homeowner appreciation. So over the course of 2 to 5 years, you're missing out 2 to 3 to 5% gains every single year over year.
Got it.
And you're not owning your own asset is basically what it
Tell me
comes down to.
something. Joseph Dio Real Estate has a philosophy of, and he believes, the owner, he believes in everybody deserves a home. What is your philosophy on that?
I think everyone should be a homeowner. Everyone has the opportunity if they qualify for home ownership. I think that everyone should take that step to creating that opportunity for themselves. Very few people realize that owning a home is the first step, if not the biggest step, in creating generational wealth. If you had bought a home back in the early 2000s, that's 20 years ago, right? You would have bought a home for $200,000-$300,000. That same home today would be $700,000, depending on the neighborhood.
And you hit it right on the nose, because I bought the house at $375,000. Now the value has increased,
Right.
which allows me to have more equity in my home.
Correct.
Which I can then utilize you guys' product called cashing out.
If you
Is that correct?
If you can point me to another asset that builds that kind of growth over that same period of time with a minimum down scenario, absolutely, give us a call.
It makes perfect sense.
Yeah.
My last question is very, very simple. Joseph wants to push out something called giving yourself the gift of home ownership. How would you actually prepare a client who's not ready to buy because, let's say, they have more debt? How would you help them realize that dream by resolving their debt versus income?
The first step that we preach is to just know where you're at. Come in, sit down with a licensed professional, have them see what your credit looks like, what your debts look like, what type of assets you have saved up, or do you have access to a 401k or family that can help you with down payment or closing costs, and just know where you're at.
And if a person, sorry not to interrupt you, but
Sure.
if a person had a pension that they can borrow from, are they able to utilize that?
Many times they can. So they'll have to check the detail of their 401 or whatever their pension happens to look like. Those pensions will have language built in that allow you to draw on them for a home purchase often. And so each pension is different.
Got it. I appreciate you taking the time to
My
talk
pleasure.
with me and, pass this information over to our clients.
Great.
Thank you.
Thank you.
Thank you for watching. Don't forget to like and subscribe our channel for more content. We'll see you in the next one.